Hi, everyone. It's Arry, chair of the Cascadia Blockchain Council and host of the Blockchain Underground and the Windshield Time podcast. Today, we had Alex Mashinsky, CEO and founder of Celsius, join us for an AMA. It was really awesome. So many great conversations and questions. And man, I learned so much every time Alex is on and I get to hear him. So I hope you really enjoy the show. He covered so many different topics like the double spend problem, $10 trillion being printed in the US with over 350 million people. Like, how much is that? People only got $1,200 stimmy checks. And I don't think those checks were big enough. We learned about FIS. We learned about MMT, modern monetary theory. We learned about Tether. We learned about the Federal Reserve. We learned about Coinbase, Paxos, Circle, and how they're doing stuff. We even talked about quantum computing. So I hope you find this session just as interesting as I did. We have an AMA every week, every Friday, from 12 to 1 p.m. PST. All you have to do is go to meetup.com and sign up under Blockchain Underground. Again, Friday, 12 to 1 p.m. PST. And then just to let you know, I'm launching a course on maven.com for anybody that wants to know the full end-to-end detail on blockchain and crypto. You're coming into the space and you're starting off in crypto and you want to learn more about the technology, or you understand the technology, you want to learn more about the crypto. It's all theory. And so it really is going to be focused on is the why behind blockchain and crypto. If you're interested, check it out on maven.com. I also have a link down here and also in the show notes. Hope you'll join me. And the class is kicking off on September 7th. All right. Hope you enjoy the show. Thank you, everyone. All right. Okay. Alex, you do an AMA every week, you said.
Yeah, every Friday, 1 p.m. I've been doing it now for, I think, over 3 years. And the funny thing is that everybody else who's in Yield is doing their AMA on Friday at 1 p.m. too. They all decided to copy the standard. They're like, okay, if Celsius is doing so well, it must be because their AMAs are on Friday at 1 p.m. So this is now the standard across the world with every company. Even if they're in Europe, it's still 1 p.m. Eastern,
It seems like Celsius, you guys set the stage and set the bar for a lot of things, like first to do a lot of things, right?
The yield standard, yes, we are the yield standard. But look, it's great to see like Coinbase, and now I saw FTX is offering interest, and Circle, and everybody's now starting to do it. And that was exactly, we talked about it, right? I mean, I think we were sitting in Vegas talking about how that's what we want to happen, right? We want everyone to start offering it, and then 100 times as many people are going to leave the banks and come, and everybody's going to unbank themselves, right? So we are there now. I mean, I couldn't be happier, and I say publicly that there is zero chance that Coinbase would be paying you 4% if Celsius did not exist, right? We forced their hand. One day we're going to force the banks to actually pay you more too, but we're not there yet.
How are we going to get there? How are we going to force the banks to actually give more back to the people?
So the sad thing is that we have 3 federally chartered banks right now and trusts who are asking us to deposit assets with us or give us digital assets to manage, right? Stable coins, things like that. We can't take dollars, right? Because we're not a bank. And they can't do it because the OCC and because the Fed and because of the FDIC rules and all the other stuff. So definitely some regulation needs to take place. And the regulators themselves have to understand that, like today I had on my show, I had Paxos, which is a New York trust company. That's the highest standard, right? When you give your money to a bank, they give you an IOU. But when you give your money to a New York trust company, they must hold it in treasuries by law. They must hold it in treasuries. So what do you think is better? An IOU from a bank that's levered 20 to 1, or a stable coin backed by U.S. treasuries, where the U.S. government is really standing behind it versus. So these are the things that people need to understand. Most people think, oh, you guys must be taking huge risk, and no, we're actually taking less risk than your average bank. So it's on us to educate people. It's on us to educate the regulators. I got an email a few days ago from Celsian, and I looked at he's telling me about his life and how he loves the service and that. And then I look at the signature and it says the New York Fed, and I was like, wait a second, and he sent it right from his work. He didn't even send it from his personal email, So we have Celsians everywhere. We just got to get them engaged and get them to have the conversation.
Amazing. Well, I would say let's have Alex give us the 5-minute spiel for those that are joining or are going to hear this later that don't know about Alex and Celsius, to kind of give us the background, or we can just jump into questions if everyone has questions ready. And to answer questions, ask questions, I would say use the Zoom feature where you raise your hand and then we'll call on folks so that we have an orderly process too. But how about Alex, maybe you can spend a few minutes just how did you get into Celsius and money over IP from your VoIP world, and what is Celsius, and what is your vision for how this is all going to end up?
Sure, yeah. So I've been around the internet since before there was internet, right? In the 1980s, late 80s, I was working on different search engines and protocols and tinkering with different technologies. And when the internet was kind of born in 91, 92, I was start asking myself the same question everybody else was asking back then. Okay, what is money over on the internet? What does it look like, right? Because voice on the internet was easy, voice over IP, right? You just took voice, you digitized it, you broke it into, you sampled it 3,000 times a second, you put it on TCP/IP. Well, it was easy for me, but basically it wasn't that hard, right? We're using it today. It's still, sometimes it works and sometimes it doesn't work. So I always joke that when we have problems connecting, who invented this voice of IP thing? It doesn't work. But money over IP was a very difficult challenge because the double spend issue, or the fact that, again, I send you a picture of my cat, you have a picture and I have a picture and we're both happy about it. But if I send you $20, if I still have the $20 and you have the $20, obviously that's not going to work too well. So the problem in the digital world has been, how do you solve that double spend problem? How do you make sure that there's only one picture of a cat and not two pictures of a cat, or $20? So I've worked on different versions of that. 2003, I was working on a version that was different than, similar but different than PayPal, right? And I just didn't crack it. I did not solve the double spend problem, right? Neither did they, right? I mean, they're using PayPal, Venmo, they all use traditional finance infrastructure. And so what's so special about Satoshi is that he or she actually cracked the double spend problem. Now they assembled 10 or 11 different things that already existed, right? The Merkle tree and zero proof knowledge and all kind of other things that we use today for all of these functions. And they've added that proof of work and giving incentives to all the right people in the network, which was brilliant. I mean, just as someone who worked on it hard and didn't crack it, but even I didn't get it the first time. When I looked at Satoshi's paper in 2009, one of my employees brought me the paper and said, hey, what do you think about this? I was like, that's the world's slowest database. This will never work. It's going to need so much electricity. I can do it 100 times more efficiently. Yeah, you can? Great. What is your solution? So here we had something that was slow and inefficient, solving one of the most complex, difficult problems of computer science, right? So my entire career was faster, cheaper, better, right? Before Celsius, I was the CEO of Novatel Wireless. We built the first 5G device in the United States for Verizon, right? The MiFi 1000 with Qualcomm, with other people. But my point is, that was faster, better, cheaper, right? You got 10 times as much throughput connectivity, and you paid basically the same amount of money. That's what my entire career was about. And here, everything was slower, everything was more expensive, and it was written in a completely new, on completely new set of rails. It was new infrastructure. So that's the magic of Bitcoin. So I completely did not get it. I was a denier, a Bitcoin denier for a few years, and then after Mt. Gox, I had to really challenge those neurons in my head that were basically saying poo poo bad, challenge them with what's more important, the solving double spend or wasting cycles. Yes, Bitcoin mining is wasting tremendous amount of cycles, computing power, connectivity, electricity, tremendous amount of infrastructure that you have to build for it. But if you're gonna secure trillions of dollars, you need all that infrastructure, right? That's what keeps it safe. So it's not intuitive. It's not something that the more technical you are, the harder it is to fall down that rabbit hole, to justify all these things.
Alex, do you mind if I ask a security question about, I noticed I went onto your website, looks very cool. I was wondering, how do you secure, for example, the private key credentials on mobile devices? Because as you know, crypto exchanges can be hacked. And as you know, the crypto wallets on the open operating system of Android can be hacked as well. So what kind of mechanism, or shall we say secure enclave, are you using to protect the private keys of Bitcoin?
Yeah, so I was in intelligence in the Israeli military.
Wow.
Most of our team.
Oh, that explains a lot.
And most of our team comes from those units, 8200, 8100. So the quick answer is you just don't put it on the internet. None of our keys are on the internet. Mm-hmm. And I think it was a year ago, maybe a year and a half ago, that GoDaddy got hacked, right? I mean, people managed to break into GoDaddy and give instructions to try to steal our website, steal our domain. Mm-hmm. And they couldn't find anything because there wasn't anything there, right? There was nothing on, our keys and our infrastructure is not connected in any way to the internet. So the answer is not, oh, we are super safe. The answer is don't put the keys where everybody can see them, right? So, and you don't, I mean, the blockchain, most people really don't dig into it, but the blockchain is not connected to the internet in any way. Like one of the most successful companies, I think it's top 10 project, is Chainlink. What does Chainlink do? Chainlink is this magic connection between the real world and data on internet and other places and the blockchain. Mm-hmm. They deliver it's like your brain. Your brain is really not connected to reality. What connects your brain to reality? Eyes, smell, touch. Those senses deliver information, deliver electrical pulses to the brain, and the brain says, oh, this means it's daylight. Oh, this means that my skin is wet or whatever, right? So the same way, the blockchain is like this brain living on its own, and unless you feed it, if you feed it wrong data, I can feed electrically wrong data to your eyes, and you'll be thinking it's daylight, but it's really dark, right? Just with the electrical stimulus, right? So the blockchain is this tabula rasa, and the question is, what are we building with it? Are we building another version of Wall Street? Are we building the worst thing that those guys created? Or are we going to build the financial future for people? Are we going to build a path for 7.8 billion people to get to financial independence? And most people say, it's not possible. You can't have everybody do well. The United States of America is exactly that. Everybody has the same dream. Everybody has the same opportunity. I came to this country as an immigrant, right? I didn't come here because things here were horrible. I came here because things here were great. Right? Most Americans don't appreciate that. They think it's like, oh, it's really hard. You want to see hard? Get out of the United States. I'll show you hard.
Yes, I've spent 15 years of my life living in between Taiwan, China, and Asia. So I do agree 100% with you because I've lived in a communist country. So I do realize the importance and the value. I do more than most other people. So, I hear you. Yeah.
Right. So
I hear you.
just to finish the punchline here, the opportunity here is to create a future, a financial platform that benefits the people. Unfortunately, today, more than ever, more than the Roman Empire, more than Byzantine Empire, you show me an empire, I'll show you that the divide today between the rich and the poor has never been greater.
Mhm.
And it's on us. It's not, we can't blame anybody else. It's on me. I'm part of the 0.1%. I'm a billionaire. It's on me. It's my responsibility. It's not like, oh, I'm just going to give some money to charity and I'm going to pretend I'm going to write a bunch of articles about it. And everybody thinks that I'm a really nice guy who gave his money away, like a Rockefellers, right? No, it's about creating a new future and bringing everybody with you. Coinbase went public. All of us have a Coinbase account. Did we participate in that $100 billion value creation? Of course we did. Did we get anything out of it? We got nothing out of it. We got charged 7%, and the few VCs that invested in that company got to keep all the value. That's what we're trying to change here. And the blockchain is the highway on which we're going to get there.
Yeah, but I think it's going to be more about things than people in the future. It's going to be about the blockchain and creating the digital identity of things monetized rather than just people, because there are more things in the world than people.
Yeah, look, I ran an IoT company, right? And Novatel Wireless is an IoT company. We just built Internet of Things, right? 50 billion or 100 billion things out there. So I know exactly what you're saying, but let's first fix the problem for the people, right? What is more important, 7.8 billion people or 50 billion machines, right? So all I'm saying is that I'm not saying don't build IoT, don't make the world more efficient or whatever, but the fact that you look at this, okay, our government just printed $10 trillion in total. The government budget is 4 trillion, and we just added 6 trillion of debt because of Corona and this and that. And, politicians never allow a good crisis go to waste, right? Boom, $6 trillion show up. So who did all that money go to? Oh, everybody got a $1,200 check. Great. So about 200 million Americans are eligible out of 330 million are eligible. Take 10 trillion divided by 200 million. Tell me how much each person was supposed to get. You got a $1,200 check. How much each person was supposed to get? Right?
That's so great that you're doing the math, because Alex, I was talking to a number of people. I'm like, let me break down this math for you. Right?
It's that simple, but no one does that math. No one tells you that you were supposed to get $100,000 or whatever. I have to do the math myself, but I think it's, what is it? 50,000 or whatever.
Well, it's absurd, right?
So you got nothing. You got cheated out. You got stolen from. Most of that money went to people who already have 8 or 9 digits in their bank account. Right? So that's what.
So once again, we got taken to the cleaners.
Exactly. We got, but this, every time we get taken to the cleaners, there's an extra zero. Okay. Again, I came to this country in 1988. In 1990, there was a bailout, right? It was the SNL bailout. And back then, that was a huge bailout. God. I think, what was it, like 60 billion or something?
Yeah, I remember that.
It was nothing. That was not, look, today you'd laugh at it. You'll be like, 60 billion, that's what it cost one highway to build one highway. So then we had 2008, right? Well, we all said 2000, that was another bailout, but 2008 was the big one, right? We printed $1 trillion, right? We printed, now it's 10 trillion. Next time it's going to be 100 trillion.
No.
Yes.
No.
Yes. Give it 10 years, every 10 years, that's what we do.
Oh, we have a hand raised from Scott.
So my punchline just is that,
Yeah.
that just before you ask a question, that instead of fixing Wall Street or fixing Washington or fixing greed, why don't we just build a new system for the people, by the people?
Right.
Just build a new system. Forget about the old one.
Let's
That's
pull
what the
a
United States was. The United States was a new system, and everybody showed up and said, I'll come here, I'll work here.
let's pull a Tyler Durden on everybody. Anybody get the reference?
Mhm.
Fight Club.
Fight Club.
Just blow it all up. Start over.
But we can do it in a nice way. We don't have to get rid of anyone. We don't have to. If we all leave, we are the taxpayers. If we all leave and go somewhere else, the other guys that basically suck all the blood out of everybody, you know, the 0.1% that collects everything from the 50% or 70% of the. I'll give you a simple example, right? Take overdraft fees, inactivity fees, bank fees, ATM fees. Okay. Just those three things together, $100 billion that Americans are paying every year. The poorest Americans are paying to whom? To the people that own the stock of Goldman Sachs, Morgan Stanley, JP Morgan, Wells Fargo, right? The poorest American are coughing up blood, paying those fees to the richest people in the world. Right? Warren Buffett was the largest shareholders of all those banks until recently. So now we all think of Warren Buffett as an amazing investor and he must be doing a lot of good, but where is all that money coming from?
Yeah.
Right? So he's not as bad as day loan guys. I agree with that, but you know, it should be illegal for a bank. You know, the Fed does not charge a bank's penalties since 2008. They eliminated that. And, you know, Senator Warren was asking JP Morgan, he said, you're not paying fines. How come you charge your customers fines for late fees? We're not charging you that when you couldn't do your repo, when you couldn't do all kind of other stuff, and the Fed had to jump in and bail you out again and again. As late as September of 2019, just 2 years ago, the Fed had to jump in and inject almost $1 trillion into the repo market to bail out all the banks. No one knows about it. Do a Google search, you'll find out.
Mm-hmm.
No one is talking about it. Why? Because 3 months later, Corona happened and everybody forgot about it.
Yeah.
So all these things are just symptoms of a very sick system. And you cannot fix that system. You have to build a new one. That's what we're here for.
I just read an article this week that said something like 650 banks have signed up to allow Bitcoin within their banking institutions.
Yeah, so there's a company called FIS, which is like the service provider for all the banks.
Right.
They do all of their backend processing and so on. They integrated with a company in New York to offer that service, meaning the switch is on, it's not off. It's like your TV. You turn on the TV, it's on, but it doesn't mean it doesn't mean you're doing anything. It doesn't mean you're watching Netflix. You just turn on the TV. So all those banks are enabled, but it doesn't mean they're offering anything to their customers yet.
Yeah. So
I'm-
I actually had a real question.
Okay, go ahead.
Oh, sorry. Did you have something else?
No, okay.
So here's my question to you, Alex, is I do a lot of reading, and I've read some things recently that said that the crypto markets and the crypto exchanges are being manipulated by just very large investors. What is your take on that?
Well, I agree that some exchanges are being manipulated, and you can see that. I mean, Bitcoin moves up or down very aggressively, usually on a Sunday afternoon or Sunday night, when everybody's asleep or no one is trading, the stock market is closed. And when the SEC tells you we are not approving an ETF because there's too much manipulation, you can't argue against it when every weekend there's something like this, right?
Yeah,
So
Binance just got slapped again.
right, exactly. So So we definitely have offshore exchanges that are probably not good actors that manipulate markets. Again, the tail here is wagging the dog. But what we need to do is basically help regulators by not using those platforms, right? If we all moved and use platforms that we think are good, and here even Coinbase is good compared to some of these other things, right? I'm not against Coinbase. I'm just saying that, you know, they didn't let you participate in the value creation here. But for all of us, I think we have to vote with our wallets. We have to vote with our wallets to earn interest. We have to vote with our wallets to support the projects that are acting in your best interest. And we have to not use the banks or the projects that are trying to, again, they're just Wall Street animals trying to suck fees out of you. Doesn't matter if they're offshore, right? I mean, they're not here to help you.
I have a question about market manipulation, following up on that. So can you talk a little bit more about price volatility? So like on the back end, there has to be some sort of code that is determining the price of the cryptocurrencies. So can you talk about that? Sort of like, how do dollar values originally get assigned to a new cryptocurrency, and then how do they fluctuate based on demand and buying?
Yeah, so there is no some magic algorithm like that decides all of that. I mean, every day, every minute, buyers and sellers show up on Wall Street. All the Apple buyers and all the Apple stock sellers show up in one place, and there's one book effectively, and the price is determined by the balance between the buyers and the sellers. In crypto, you have 300 different exchanges, and on each exchange, it has its own book of buyers and sellers. So at any moment, the price on Coinbase and the price on Binance can have several $100 difference. Sometimes it's thousands of dollars of difference, just because more buyers showed up here and more sellers showed up there. So there's no logic to it. It's not like it's behaving in a rational way. And there are arbitrageurs. That's part of how Celsius makes money. We lend coins to people who are arbitraging prices between all these different exchanges. So instead of them just making the money, now they have to borrow the coins from us to buy on one side and sell on another side. And at least we get an interest payment for that action, where before they would just used to do that themselves. When you kept all your coins on exchanges, they were like, oh, thanks for those coins. We're not going to do the arbitrage ourselves, right? Now they have to pay for it at least. So, but there's no, look, Celsius is a hodler community. We're almost 1 million hodlers. Our customers don't trade on exchanges all day long. So the price is really determined by, that's what I'm saying. It's like the tail is wagging the dog, right? The price is determined by the last few people who decided, oh, I'm dumping, or oh, I'm buying. Oh, I saw Elon Musk say something positive. I'm pumping, you know? So nothing happened. Nothing changed since 3 days ago, but you know, the B word conference was in and we were up 10%. Or I don't know how much we were up, right? Did anything change? Nope.
Someone needs to put a muzzle on Elon.
Well, this time he actually said only good things, right? I think they did put a muzzle on him. They're like, I think there was like an electrical thing on his ankle, and they zapped him every time he tried to say something negative about Bitcoin.
So fun. Manveer, yeah.
Hi, thank you so much. So Alex, forgive me, can you tell me a little bit about your platform and how it differentiates from, say, Abra and like Coinbase and everything else that's out there?
We're good and they're bad. No, just kidding.
No, and why would somebody like, how would your coins be secure on your platform versus like?
No, these are great questions, and so we have a mission, right? Our mission is to help hundreds of millions of people. Most of our competitors, their mission is to make money, right? I mean, they're not even hiding it. They're like, yep. Coinbase, every quarter they brag to Wall Street about how much money they've made from you and me, right? That's their mission. Is like, we'll deliver you guys profits because all these crazy people are buying and selling coins all day long. That's their mission. And should we promised you a lot of money, but we have to take some of that back and give it to our customers because these Celsius guys keep publishing these high rates. So we can't just give you, the shareholders, all the money. We have to take some of it and pay 4% to our community. Celsius pays you 8.8. So why are they paying you only half? Because they think that if they paid 4, no one's going to leave, or less people are going to leave and go to Celsius, right? So it's almost like they're trying to stem my largest single source of customers is Coinbase. So they're trying to stem the stampede by paying something, right? So again, Coinbase is a great company. They're very safe. They do everything right, but they're not there to help you. They're not there to get you to financial freedom, help you not take excessive risk, right? I mean, we're not trying to sell you anything. You can't buy anything on Celsius. The only thing you can do is put your coins, earn interest, withdraw them, and go somewhere else and sell them. We don't sell them for you. We don't buy them from you. We just earn interest. You don't do anything. Every Monday you get paid. You know, it's like the opposite of going to work, you know, where you you work the whole week and then sometimes you get paid. So what we tried to do is what existed here. When I came to the United States 30 years ago, I put money at Citibank. I earned 7%. I didn't have to do anything, right? My money made money, right? And that's what it should do. Your money should earn yield. And the Fed, again, robbed us, all of us, by lowering rates to zero. The real value of money is not zero. We know it. How do we know it? People are paying us more than 8.8%. If I can pay you 8.8, I'm earning more than 10. That's the true value of money. That's what the market decided the rate is. The Fed decided it's zero. Your bank decided the real rate is 0.5%. That's what they pay you in interest, right? So that's what we're fighting over. So the other guys are not fighting to shut down the banks or give you financial freedom or anything else. So again, you got to vote with your wallet. Are you going to vote for the people who are here to help you?
Who's determining that rate of return, and what do you think is a fair rate of return, Alex?
So the rate has fluctuated as low as, I think, 4% on stable coins, as low as 4% and as high as 12%. And we don't determine the rate. The rate is determined by basically the highest bidder, just like the price of Bitcoin is determined by the buyers and the sellers. Here, the rate is determined by the borrowers and the lenders. So we are a lender. The borrowers are mostly institutional exchanges. If they're not desperate, they'll be like, what do you want? 8%, I'm not paying you that, right? They're just not going to borrow from us. They're going to borrow from someone else, or they're not going to borrow at all. When they need that money, I'll give you a simple example, right? Let's say the price of Coinbase and Binance, the difference in price is $1,000, right? It's 31,000 there and it's 30,000 here. So all you need is Bitcoin and stablecoin. On one side, you sell the Bitcoin where the price is high, and on the other side, you take USDT and you buy the Bitcoin at $1,000 cheaper. And you can do that 10, 20 times every day and book $1,000 every time you do that trade, right? So Celsius lends you the Bitcoin, not you, but the institution. So they're making, I'm charging them 10% a year. They make that in a week when the gap in pricing is high. Like this, they make money out of thin air. Why?
Isn't that encouraging speculation and volatility though?
That's not speculation. When you buy and sell at the same time, there is no speculation. You just book the profit.
That's arbitrage.
Well, why would they be buying at those rates though? Like, why would an institution borrow at 4%?
Let me explain it again. You can do it right now. Right now, you can go. You have a big screen. Put those two prices in front of you: Binance and Bitfinex, or Binance and Coinbase. You will see a difference.
Oh, so you're saying the institutions are doing arbitrage
all day long, all day long.
Okay.
And arbitrage.
Could you give us more?
Arbitrage
could you give us more
risky.
of a peek? Yeah.
Arbitrage is not risky. You book the difference instantly, again and again and
Right.
again and again and again.
It just becomes a liquidity game at that point, right?
Then the question is, how much did you pay for the assets? Because if you're a bank you cannot hold Bitcoin, right? The Fed does not allow you to hold Bitcoin. So you have to borrow it. You cannot buy it with your assets. They'll say, wait a second, you took customers' deposits and you use them to buy Bitcoin? What are you, crazy? But if you borrow it from Celsius, that's fine.
Could you give us a more of a peek behind the curtain on the investment strategy? Is it purely to institutions for arbitrage, or I mean, you're a guy with
we have hundreds of strategies. Today we just issued a press release like a few hours ago that we invested $54 million in Core Scientific. Okay, and Core Scientific is a Bitcoin mining company. You can look it up. 2 days ago, Core Scientific announced that they are going public at a $4.3 billion valuation. You can do a search, right? Now, Celsius is one of the largest investors in Core Scientific. But we did that months ago, before China cracked down, before everybody realized that, oh gosh, all these people are going to come to America, right? So when you're ahead of the curve, you make smart investments, they multiply. For us, it's just a source of yield. For me, investing in Core Scientific, it's like creating yield. It's the same thing, right? So all we do, that's just one strategy, right? Another strategy is, again, lending the coins. Another strategy is we have our own mining business, right? What is mining? I put money into a facility, into machines, and it spits out Bitcoin. Every 10 minutes, Bitcoin comes up. Now, I have to pay my customers Bitcoin. When you give me one Bitcoin, I have to pay you, right? I have 110,000 Bitcoin. I have to pay 6,600 Bitcoin every year. That's the interest, 6% interest on 110,000. I can lend Bitcoin and earn interest, or I can go and build a Bitcoin factory. So I did both.
I have a question following up on that. Can you talk a little bit about the hardware that you're using? So one of the really interesting movements right now is toward quantum computers, and it would make sense that these computers are going to have substantially more computational power and efficiency in terms of mining than traditional hardware processors. So I'm curious how you think about that.
So quantum computers are like, did you have in high school like a chess whiz who could win? He won against everybody, but when you asked him what beer do they like, they were like, beer. I don't know what that is. So that's what quantum computers are. It takes a quantum computer exactly the same amount of time to figure out what is 2 + 2 as it is to solve one of the world's most difficult problems. It's not like it's like a super thing that is 10 times smarter than us or whatever. So today, there's no quantum computer that's even close to solving any of these puzzles of SHA-256 or any of the encryption stuff that we're talking about. It's going to take 10, 15 years before they even get there. But and now a lot of these algorithms are quantum resistant. So it's not like you can just take a Google quantum computer, an IBM quantum computer, and tune it a little bit, and you can steal all of Satoshi's coins. Okay, that's just not how it works. And I did a whole hour-long interview about quantum computing. So if you just put my name in quantum computing, you can find a panel with the guy who runs quantum computing for IBM, us exchanging ideas and talking about this stuff. So it's definitely a very interesting topic. I'm not saying quantum computers are shit. They're amazing. And they're going to replace a lot of the computers we use today, but it's not tomorrow. I mean, this is years away. Today, we still have to use ASICs. You want to mine a Bitcoin? You need very, very powerful machines to run 24/7, consume a lot of electricity, waste a lot of power and heat and communications and everything I was talking about before.
I guess Carl Weaver has another question. Hand up. Or did you write it? Carl wrote. Alex.
Yeah, I wrote it. And I also, I just wanted to make sure that it's pretty clear because I wanted to get Alex's viewpoint on China's sovereign digital currency and how some people in the world are looking at this as, quite negatively when I think it's actually a creative thing. But it seems as though central banks around the world are looking to try and do something similar. So I wanted to get Alex's viewpoint on that.
Well, China's digital yuan, or CBDC, is the world's largest cryptocurrency today. So anyone who thinks of it differently doesn't understand what they've done, right? So it's definitely the world's largest digital asset, right? They have 1.3 billion people. They're going to give every one of them a digital yuan. We've barely signed up 150 million people in 12 years, in 13 years. So who do you think is ahead? So
I know who's ahead.
and the United States of America is still debating if we're a good thing or a bad thing. So look, basically this is like a 3-horse race, right?
Mm-hmm.
One horse is the public, open, ledger, decentralized, focused cryptocurrencies, which we all love and use every day. One is the CBDC. China is obviously leading the world in that. And the third one is all these corporate versions. You know, JP Morgan has a version, Facebook has a version. I just heard Amazon has a version, right? And so on, so on, so on. I'm sure Walmart is going to have a version. So
I'm waiting for Trader Joe's.
So yeah, exactly. So you know, my son wanted a dog, and I said, how much is it? And you know, I told him it's like $3,000, and he's like, oh, I can afford it. And I'm like, where can you afford it? So he brought me. I brought him a coin, a Bitcoin physical coin that I got at one of the conferences, and he's like, here's my money. You know. So that's how most people think about Bitcoin. They think it's like just a physical coin that you give somebody.
I like your analogy. It's a 3-horse race. I think it is a 3-horse race.
Let me finish the analogy. So in the internet era, we had exactly the same thing, 3-horse race. We had IBM and Microsoft telling us that the intranet is the future of the internet. Mm-hmm. We had the public internet. And then we had Al Gore tell us, no, I invented it, and it's called the information superhighway.
Yes.
So nothing has changed, but it doesn't mean automatically that because the right thing won in 1990, which was the public internet, that this time also the good is going to prevail. None of that means anything, you know? So most people in the crypto world think, of course, you know, we are the good guys. No, China shows up and says to 1.3 billion people, you're going to use it. And then they go to 68 countries and they say, we built $1 trillion. We're going to put $1 trillion worth of infrastructure in our Belts and Road Initiative, right? What used to be the Silk Road. It's not the Belt and Road Initiative. Right. We're going to spend $1 trillion. The only way you can transact on that Belt and Road is with digital yuan. Do you know that? You cannot bring dollars.
In fact, I do know that because I was pretty much the first person to give public speaking on China's sovereign digital currency in 2018 at Seattle University and 2019 3 times in China. So hell yes, I do know that.
Right. So Washington, not just that they don't know what's good and what's bad, they don't even understand what China is doing. China is trying to steal from the United States, the US dollar being the reserve currency of the planet. That's what they're trying to do.
Right.
They dumped all of our treasuries. They already dumped all of our treasuries. They used to have $3 trillion worth of.
Well, they still want our gold, though. They still want our gold.
They're buying it. They're buying our gold and putting it in China. It's not sitting in Fort Knox.
I understand.
So
very good.
My point is that from my point of view, we're losing. We're not winning. One horse already did 3 laps, and we're like all celebrating because we got on the horse.
But here's the thing, Alex, like all this money that all these countries are printing, like the US and China, it's not backed by anything. Right?
It doesn't matter.
So, very interesting point.
Unfortunately, that's what Japan did for 30 years. Why the rest of the world is doing MMT, or a modern monetary theory? Because everybody who's thinking like you and me, right? I agree with you 100%. Everybody who did it the traditional way of, okay, we have to be Austrian economics, we have to be responsible, whatever, now looks at Japan and says, wait a second, they've been printing crazy money for 30 years and nothing. There's no inflation, there's nothing bad happening. The government in Japan owns over 70% of all the securities, all the bonds, everything, all the mutual funds, all the ETFs, and nothing bad is happening. So the United States and Europe said, wait a second, we can do the same thing. Let's just join the party. Obviously, something really bad is going to happen, but some of the smartest people in the world are not telling you no. MMT, it's it's beautiful.
Yeah. So getting back to the question, though, it seems as though what the Chinese are doing, central banks around the world are looking to emulate.
So again, we have 3 horses there too. Inside everywhere, there's 3 horses.
They're purposely trying to devalue our currency.
Yeah,
exactly. They do everything they can to destabilize, just like the Russians, right? They do, and I'm originally from the Ukraine, right? So I know what they do. So they're intentionally trying to destabilize. It's 100% right. And look, again, CBDCs will come in 3 forms. The people who are reserve currencies, again, or people who think they're reserve currencies, right? Europe, the United States, Japan, China. The people who have shit currencies, right? The shit fiat currencies, right? So if I'm Venezuela, I'm going to try to do a CBDC. If I'm Argentina, I'm going to try to do a CBDC. I don't have a choice. I have to already have 20 zeros on my note. I have to create a new one anyway. Why don't we just make it a CBDC, And then you have countries like El Salvador who are stuck in the middle, right? There's a lot of countries like that. Most people don't know that. Like Hong Kong is pegged to the US dollar, right?
Right.
El Salvador pegged to the US dollar. They don't have their own currency. And they're going to try to add something else. They're going to be like, you know what? I can't be attached to this dollar thing. They're printing it like crazy. Why don't I add something like Bitcoin? Why don't I add something like Ethereum or something else? Or a CBDC from another country, right? So that's what's going to happen. You're going to have 3 horses. And right now there's a beauty contest. Everybody's running around the world and saying, hey, join my camp.
Right.
My horse is prettier. Bet on my horse. My horse is going to win the race.
But Alex, let me ask you this. Okay, so back to the whole China and how they're
you have to continue the horse analogy.
Right.
From now on, every question must include the horse analogy.
Okay. So with that horse in the race, let me ask you, USD Tether, right? Like that's not backed by anything.
All right, so let's dig into that. Let's unpack that.
And if they can buy Bitcoin with USD Tether and they're like printing out their own Tether, like how does that work?
So that's what they told you, but that's not true. First of all, USDT is not a horse, it's just a pony, right? Why? Because all of USDT put together is $62 billion. How do I know? You can count every USDT token that was ever issued right on the blockchain in 2 seconds. And if you don't know how to do it, you go to Coin Market Cap or CoinGecko, and they'll show you in 2 seconds exactly how much is issued. $62 billion. One branch here, I'm in Manhattan, right? One Chase Bank branch here on 3rd Avenue has more than that in deposits. Okay, so when the Fed chairman or Janet Yellen tells you, look over here, this is what's dangerous, right? That's like a magician. When you go to a magician show in Vegas, do they make you look at the right hand or the left hand, right? Wherever the trick is, they're going to make you look at the other hand. So let's dig into it, right? USDT, Circle, Paxos, I work with all those guys. They're all partners of Celsius. All of them has published, what do they have? What do you mean not backed by everything? Every token issued by these companies is backed by $1. The question is, what is that dollar held at? So Paxos came out and said 98% of our tokens are backed by US treasuries. Circle came out and said 40% of our tokens are backed by other things than treasuries, meaning they're using commercial paper and all kind of stuff that's a little bit more risky, not very risky, just a little bit more risky. And Tether came out and said, okay, we're the bad boy. We have 60% of our stuff backed by non-treasuries, commercial paper. Now, your bank, where you keep your money, has 0 reserves, not 1% reserve. This is 100% reserves. Your bank, and if you don't have to believe me, you can ask them. You can look at their financial statement. In 2019, the Federal Reserve lowered the requirements for banks to 0. It used to be 10%. Your bank used to have 10 cents for every dollar that they've issued in loans. Now it's 0. So here's a company with 100% in reserves, different types, but 100% in reserves. USDT, Circle, Paxos, TUSD, right? We have 12 different stable coins. I can tell you each one of them exactly what the stats are. You show me one bank that has more than 10% in reserves. Most banks are levered 20-1.
Wow.
20-1. This is 1-1, and your bank is 20-1. Now, when you put your money in the bank, what do they give you? They don't give you treasuries. They don't give you commercial paper. They give you an IOU. I owe you $100. I owe you $1,000.
Alex, what is your percent of reserve?
100%. I'm not a bank. I'm not allowed to. I cannot do fractional reserves. This idea that you can just create money out of thin air. Banks have license to create money legally. They create money. That's what they do. And every 10 years, we have to bail them out, because when they do a good bet, everything works out. They get giant bonuses. When they take a bad bet, right? They bet on something really bad, like Archegos, right? The banks lost like, I don't know, $20 billion in Archegos, right? They lent them a tremendous amount of money. Archegos blew up. The bank lost money, right?
But they don't have to pay any penalties. We do.
Nothing. So
not right.
But they created that money out of thin air. That money didn't exist. Now that they lost it, if it was a little bit bigger loss, the Fed would have to jump in and bail them out. But it wasn't a big enough loss to bail them out. They already had enough profits to satisfy it. But 2019, it wasn't enough money. 2008 wasn't enough money. 2000 wasn't enough money in the banks. We had to bail them out.
Yeah.
1990, we had to bail them out because of SNL and so on. So every 10 years, it's something else. But I guarantee you, it's not going to be Tether. I'm willing to bet my entire net worth that Tether is not going to bring down the financial system.
Let's jump to Adam Gehring. He has had his hands up.
Hey, Alex. Great to meet you. Adam here. I noticed you don't onboard users in Washington State presently anymore. So I'm with Stably Corporation. We're pursuing a trust charter in Washington. So we'd be happy to help you re-onboard Washington State residents. So once we get that going.
The minute you get it, we'll be best friends. Right now, exactly. The banks or whoever, somebody basically called the state and made sure that, and they wouldn't give us a license either. Like we tried to apply for licenses. I'm still waiting, right? It's been 2 years. And, like it's very frustrating, but same thing in Texas, same thing in a few other places. But, look, I always remind people that the regulator, the SEC, they're not the judge. They're just the cup. And sometimes you walk on the street and the cup comes and it hits you on the knee and it says, hey, you were jaywalking. I wasn't jaywalking, and I'll take you to court and I will fine you. I'll take away your what do you call it? Your cop permit, because you're doing things that's not under your purview. You, the regulator, in many cases. Now, a lot of regulators do a great job, right? Right now, I'll give you an example of a great regulator. Esther Pierce in the SEC, publicly stating, despite the fact that the other commissioners said to her, don't talk about this stuff, She publicly stated it is not the job of the regulator to defend the incumbent. It is the job of the regulator to encourage innovation. And we need more people like that, right? The people who understand that after everything, it's about the user, the customer, the American citizen, the American resident. Is it in their interest or is it not in their interest? It's not about who wrote the law and spent billions of dollars in lobbying in Washington.
Mm-hmm. Yeah, I'm not a fan necessarily of U.S. securities regulations, but what is your opinion on the interest-bearing stable accounts not being a securities contract under the SEC purview?
I'm not a lawyer, so I can't really tell you which way it is. But what I think we're facing is really again, the regulators getting to, these are the cops getting together, including the guy who has a printer in his basement who prints all the money and says, wait a second, you know, we're going to decide who's a good player and who's a bad player. So we're going to decide that Paxos is a good player because they already have a New York State bank charter or bank trust. And we're going to decide that USDT is a bad player, even though they do exactly the same thing. And they use basically, like, again, most banks do exactly, they buy commercial paper, they buy, they buy it on 20 times leverage, right? So I you know, the debate is just getting started. And, you know, I think we're going to need to really give it some time and see if it's going to be an even debate, or is it going to be like, okay, we just decided stable coins are bad and we, the Fed, are going to issue our own CBDC. That's not America. In America, we don't have some mighty old God from the Acropolis decide for us what this world is going to look like. We let commerce dictate what is good and what is bad, who's going to win and who's going to lose. And right now, there's about half a dozen stable coins here that are dollar denominated. They're all competing with each other to become the dominant one. And I'm voting for that to replace the Fed or replace the banks or replace our traditional ATM machines and everything else, because we can all transact with stable coins much faster, cheaper, and better than we can with the traditional banking system.
Yeah. Hey, Alex, we have we're out of time, but you know, if you can go for another 5 minutes or so.
Somebody's waiting for me, so I got to jump off. But look, I want to thank you guys again. None of this is going to happen unless we all basically sign up to the cause and work together to bring a lot of people with us, right? I mean, this is a fight, not even just for us. It's a fight for our children. What do you think our kids are going to have if we don't fight this fight? What are they going to be left with? Trillions of debt and a CBDC dictated by, you know, again, in China, the central bank can control, when they give you that digital yuan, they can tell you, you're only allowed to buy groceries with it. And if you didn't buy enough vegetables, we're going to take away that money from you. That's what they can do. Okay. And if you do bad things, like you gamble or you spend too much money on I don't know what, we're gonna mark you as a bad citizen. They actually give you a ranking, right? And then you get penalized. Like again, even Russia didn't do that. I was in communist Russia and they didn't have all that stuff. So if we don't pay attention, we in the United States of America can end up the same way. Somehow we think we're immune. It's all in 1,000 cuts, and the CBDC from the Fed is just another cut, like this, right? So let's make sure it doesn't happen. Let's let the American dream live, and I'll see you guys later.
Thank you so much, Alex. Thank you,
Thanks,
Arry.
Alex.
Thank you, Alex.
Thank you.
Thanks, Alex.
Bye.
Have a good one.
Yeah. Thank you everyone for joining, and we'll see you maybe next week. And if you have any other requests for speakers or people that you want me to bring on, just let me know.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again and enjoy the show.
What are you doing?
Stuck inside.